No, we put some data out yesterday that after the rules changed from the 1st of April, there has been a rush of buybacks. Nimesh compiled this data and we put this out on the editor's playbook yesterday and the numbers are there. I mean, of course, 24,000 crores, but bulk of it from Wipro and Bajaj Auto. But there are, lots of other smaller sized, buybacks which have been announced since. Sign, for example, Aurobindo is there and so on and so forth. So this is, the initiative, the change in rule has been taken up by promoters and companies in a significant way. And it's just been not very long, a month and a half or so. Bhavesh Shah is with us. He's Managing Director and Head of Investment Banking at Equirus Capital. We also have Devyansh Nasa, Partner, EY, Pathinan. Gentlemen, great to have both of you here. Thanks very much for joining us. Prashant this side. So, Bhavesh, if I can start with you. Is this, as I said, Bajaj and Wipro, of course, accounting for the bulk of it. But lots of, the list is long. Transaction size, etc., is small. What are you seeing out there in terms of companies and interest and just intention to do this? Buybacks after the change in rules?
Hey Prashant, good morning. Good to be here. Thanks for having me. If you step back and look at the capital market environment right now, of course, there is a volatility out in the market. At the same time, a lot of these companies believe that they have excess cash, which can be used better from a capital allocation perspective by giving it back to the investors. That's one. And the second, one of the biggest triggers has been one of the recent changes by SEBI in terms of making buyback more palpable from a taxation perspective, and as well as, more market friendly. So I think, companies can buy back from the market. I think, these sends out very strong signals to the investors that, company believe in their growth story going forward. And, this can be a very EPS accretive strategy. Clearly, I think some of these companies want to make sure that the investor interest is alive in this counters and this buyback help in that respect.
So the first thoughts from you, Devyansh, what are you seeing in terms of interest and pipeline from here?
Thanks, Prashant. So, I concur. There have been three major changes which have happened, which has led to this. We talked about the tax reset, which is now it's more clearer, it's more fair, more predictable for stakeholders. There's a cash surplus that is available. But there is another angle that we should think about, and that is the 12% surcharge, which comes on promoter capital gains from these buybacks. And, that could somehow change the maths for some founder-heavy companies. So, I wouldn't be surprised if some of them pivot back to dividends instead of using buybacks, or maybe go for using cash for inorganic plays instead. But certainly, as we look at it, there have been 25,000 crore worth of buybacks, and it's growing.
So what is, just explain that surcharge point, Devyansh, if you will?
Yeah, so it's basically coming in on the promoter capital gains from the buyback. So if the promoter is selling in, there is a surcharge which the promoter has to pay.
I see. So you're saying that may disincentivize some of the founder-heavy companies to do it and maybe use cash elsewhere.
That's correct.
Right. Bhavesh, any thoughts on this particular point?
So I think, essentially what SEBI wanted to make sure is that, the new rules are not misaligned from a promoter and a shareholder standpoint. And, we had seen instances in the past where buyback was used by the promoters to kind of, make gains for themselves and rather than shareholders. So I think what SEBI has done is disincentivize the promoters by participating in the buybacks, by including the surcharge. Effectively what it means is, there's a clean way of getting the, buying back from the shareholders into the company. The promoters are not participating in this buyback, and that kind of, from a SEBI's perspective, would lead to a little more transparent and fair process of creating these buybacks.
Yeah, yeah. So where is there a sector where we are likely to see more of this, Bhavesh? I mean, just
I think,
to drill it down. Yeah.
Absolutely, Prashant. I think, we will see more of these in companies which are obviously very cash throwing, not very heavy on capex, not very heavy on maybe acquisitions. Of course, you could see acquisitions across, but, effectively sectors like, technology for sure. So I think wherever they don't have specific needs of, capex coming up, some of the pharma companies, wherever there is a cash, we'll definitely not see banks doing this. We'll definitely not see infrastructure companies doing it for sure, because they will need cash for growing their businesses. But it will always be cash throwing businesses and industries where we will see this action.
Is there like a how much is enough as a strong signal? Is there a science to this?
Great question, Prashant. I think my personal view is, I think it's more of a signal that really matters. It's more of a confidence that the company is exuding to the investors at large. But at the same time, I think the company has to also be cognizant of the fact that what are the kind of signals it is sending out to the investors. Of course, the price is down, and we are there to buy and support these prices. We think this is a great EPS accretive price. But the other is, the signal which the company is giving out to the investor world at large is that I'm not acquiring. There's not major capex. The growth plans are going to be whatever they are organic. So I think the companies need to be very calibrated in terms of what is the signaling and what is the messaging. The investors are able to grasp by way of this method. So.
Bhavesh, I get that. I'm just saying that how much needs to be done so that the signal is strong enough, and it's not a weak signal.
No, I think you can't have smoke without fire. So I think you need to. I think they're very difficult. There's no specific science to this, and I think it all depends upon the market conditions as well. But something. If the companies always announce and do nothing, the next time around, investors won't take it seriously. But if something is done, I don't know, there's 10%, 20%, 25%, 50%, very difficult to put a finger on a number. But I think the actions need to follow the talks for sure.
Yeah. No, that most certainly. And I mean, year after year after year, if you look at markets like US, etc., there is, of course, earnings growth. Now earnings growth, because of the last few years, is very strong. But otherwise, during periods of low earnings growth, buybacks have resulted in, large, have accounted for large amount of growth in US, hundreds of billions of dollars every year in the US over the last, I think 10 years more. So, of course, the size here is much smaller, but we are starting to see some of it. We'll track this space. Thanks very much, Bhavesh, for joining us on short notice. Divyansh, thank you very much for being here on CNBC TV18 as well.